welcome to this third episode of Road to Growth, an entrepreneur's journey to raise funds. We've talked about structuration, about intellectual property, about investing from an investor's perspective. And today, now, we'll be addressing the potential idea of going public, IPO or no, what it is you should know. And to talk about this, I have the pleasure to welcome Constance de Waziers from... Hello, from HSBC, who's the Director of Equity Capital Markets, and Aurélien Narminio.
Thank you for having me.
Thank you for being here with us, from Euronext, who is Head of Equity Listing. First thing first, a few words about those two very famous institutions for the entrepreneurs to better understand the context. First, Euronext is the leading European market infrastructure covering the full capital markets value chain. It's operating regulated exchanges in 7 countries: France, Italy, Belgium, Netherlands, Portugal, Ireland, and Norway. It's the first listing venue in Europe with close to 2,000 listed companies, among which you have about 700 tech companies. Lovely. So that's correct for now. And regarding the HSBC group, it's a partner for business growth across the world since 1865. I don't think many people knew that it was so old. Indeed. Founded in Hong Kong. And it's a global network to support clients in all their economic and international development around the world. It serves around 40 million clients in about 64 countries and has a very strong presence in Europe, as it's headquartered in London. If we could still call that Europe, but at least that's the introduction. So we talk about IPO today, and maybe I'll start with a broad question being, what can an IPO bring to the development of a company?
Thank you for asking that question, Aileen. So I think people should have in mind that an IPO is really the most effective growth acceleration tool out there. So it's really a tool that is there to help companies fund their growth and accelerate it. If you look at a few elements, public markets have a specificity compared to private markets. They're capable of funding innovative and high-risk ventures like no other source of capital. Why is that? Public equity has no finite time horizon, contrary to private funds, which have to look for an exit once they are invested with you. And they can provide capital at scale and fast. When you fund innovative ventures, what distinguishes you from more stable and established businesses is the uncertain nature of your cash flow and timing and size of those cash flows. And that's where public markets are the best suited tool to accompany your growth. A listing on an exchange also has another few benefits. For the management, it allows a form of independence. So as a manager of a listed company, you sell your strategy to the market, you execute it, and the market is free to buy or not into the strategy. So that results in a price of your share on the market. When private funds are at your board, they often come with a view on the strategy for your business. And so it's more of a cooperation, but with people who have strong views about where you should lead the business and who have strong views about their own objectives, which are their portfolio management objectives. And this brings me to another point, which is important. Once you're listed, the shares are liquid, which means that you can take your own business strategy decision for the benefit of the company, but you are not polluted or influenced by the portfolio management constraints of your shareholders. Because if you're in a private context, if your shareholder needs to exit next year, maybe there are certain risks or investments that you can't take as long as they are still there. I'd add one more, and which is one that people often don't have in mind. The visibility that comes with a listing adds a lot of credibility with suppliers and with clients, and which actually our clients often tell us after the listing how powerful that element has been in their IPO.
And maybe to add to this point, I think that being listed really helps to better attract and also retain talents. And we've seen that with several companies who shared with us that they have attracted a certain level of talents that they would not have pre-IPO, and that they really saw the change on this. And maybe another point as well on, more the broader HR question is that being listed allows you to incentivize management more easily because the underlying shares are liquid, of course. Well, you have an objective value plus it's liquid. So it's a very powerful tool towards your employees and in particular the top management.
Is there an optimal timing you would consider for companies to go on an IPO and get listed?
Yeah, so when we look at the IPO, it's a tool that serves a lot of different purposes. We see companies coming to the market to manage the exit of investors, and we often see the best stories on the market are companies that have a very clear story about the use of funds they want to make with the capital raised at the IPO, and who have a convincing and credible story that they can execute about their business plan and their growth story. So coming to the market, in our view, it's usually the moment where you scale up, you accelerate, there's a huge need for capital, and you have a very clear story to tell the market that is credible and that shows a path to growth and profitability.
Just to be clear, timing to the market should also take into account current environment. I think this is really key. So you have those external factors that can really have an impact. So even when a company is ready for an IPO, it should really take into account current environment, economic indicators, potential things that could affect investors' appetite. And this is really key. So once the company is ready, our key advice always is be able to seize quickly the market window if it's a favorable one, but please also be patient if it's not the right window. And this is often a very difficult message towards management team who've been working very hard. It's a burdensome process to get ready. And sometimes the best advice is not to seize the first window, but to wait for a more favorable window.
Mm. This is a completely different setup from private investors. What do public market investor look for?
Maybe I can start by sharing a few elements from the IPO survey that we just did. We just got a few weeks ago answers from more than 100 investors, global investors, about the IPO market. The first element to share with you, I guess, is that the IPO market is still, well, investors are still cautious about the IPO market. There is still some questions on the broader environment, although pickup of activity has started, but the major reopening of the market is more expected for 2024 in Europe. And in terms of theme, the key theme that investors are looking for, I think it's really interesting to see that there is a major difference compared to 2 years ago, where growth was the only word that investors were pronouncing. And now, of course, growth is still important. It's still at the core of what they want. But they mention more that they are looking for profitable growth, sustainable growth. So not pure growth as we used to see it. So I think that the focus is much more now on growth, of course, but also cash flows, resilience, and sustainability as well. And maybe one last point that the investors were mentioning, that in terms of sectors, the sectors they're expected to see reopening the market in 2024. The 3 top sectors that were mentioned was first consumer, and especially a focus on luxury, then healthcare and tech. So it's interesting to see what is expected by the market on those. And
I would add one fundamental point that people sometimes in the process forget, because they look at maximizing the valuation and getting the deal done, and there's a lot of advisors around you and you're going through a complicated process. You need to keep in mind, give your investors a good deal. And how do you do that? You need to be super clear on the use of funds, on the project, on how you're going to execute it, and you need to be credible. There needs to be a clear rationale to the IPO, and you need to set a valuation where the public investors don't feel like they've overpaid the asset. After an IPO, when the stock price crashes, the value of that IPO to you as a tool to make acquisitions and to have the possibility to raise follow-on funding is much lower when your stock has dropped, because it becomes less liquid. So it's important to set the right price and give your investors a good deal.
Yes, indeed. And it's a question about confidence and trust that you're building with your investors.
Yeah.
So how do you help companies in their preparation towards the IPO?
maybe I can start. Well, at HSBC, we really see ourselves as global partners for companies. So we accompany them from the first step to the multi-billion companies, and also throughout economic cycles. So for us, IPO is never a standalone project that we consider and on which we help companies. It's really one of the elements, well, a big element, very structuring, but still only one of the elements of a life cycle of a company. So to us, it's really a part of a broader relationship. And it's part of helping the company on the strategic dialogue, but also on the financing and also on the day-to-day, for example, helping them on the cash management on all their subsidiaries. So it's one of the elements of the development of companies. And so the key, bottom line, the key elements that I think we provide is really the ability to help them to go to the maturity level to be able to list, and of course afterwards as well in the aftermarket.
As an exchange, I think we are obviously more focused on the IPO as a key moment for the company. And so we try and make sure that leaders can really take the decision of the various sources of funding at hand with all the information they need. So in that spirit, we run, we have several programs, but our main initiative around that specific topic is our pre-IPO program called IPO Ready, which is very successful. It's been launched in 2015. Since then, we had over 900 companies joining the program. What does it do? We take founders, CEOs, CFOs, depends basically the leaders of an organization that has a question around IPOing or not in the next 2, 3, or 4 years. And we walk them through the process of going public with a network of partners, which are investment banks, auditors, law firms, financial communication agencies, ourselves. Also with an academic partner starting with the next cohort to look at all the managerial aspects and challenges of an IPO, which will be INSEAD, a very famous business school. So this year we have about 140 companies who join us for this program across 16 countries. We run them in 9 different locations, and the average turnover of companies joining us is 30 million a year, and they've raised on average 50 million. But we have a wide dispersion of sizes, of companies, and of sectors. So I would encourage, obviously, our listeners, if they are founders of technology companies and they want to get to know the IPO as a potential avenue for the future of their company, to join us in that program. We also run other initiative. One very important one on which we have worked a lot with HSBC is Euronext Tech Leaders, of which the aim is really to create a network of the most successful technology companies listed in Europe and bring them together with private companies that will list one day. Dassault Systèmes is part of the Tech Leaders Initiative, and HSBC works with us on this one.
Well, thank you for sharing that. Is there a final advice you would give to the founders that are considering in their journey to potentially get listed?
I would say, from my perspective, that the best advice I could give is it's never too early to start preparing for an IPO, even if finally you decide not to go ahead, because the preparation and the structuration itself helps the company to mature. And when you look specifically at an IPO project, the actual preparation phase for an IPO project is maybe 4 to 5 months. But when you look at the IPOs, the companies which have really well succeeded in their IPOs, they have usually started to reshape and structure the company at least 2 years prior to the date. So it's a long-term process, also a maturity, getting the level of maturity of the teams, hiring the right people, getting the business process right. So a certain number of elements that require more than the few months just before an IPO.
I would very much concur to that. I would say it's never too early to prepare, as said Constance. If you feel it's a possible avenue for your business, don't be shy. Speak to your investment bank or to Euronext, because we can really sort of help you get to the knowledge level about what it entails for your business and what opportunities it offers, but also what constraints an IPO brings to the company to get you to making the right decision. So whether you're a big company or a smaller company, and whatever your stage of development, I think it's useful for a management team to really know that option. So I think that's my advice.
Information is key. Thank you both for sharing your perspective and enlightening our founders into their potential journey to the stock exchange.
Thank you very much.
Thank you.